Hey there, folks. Today, we're going to talk about some costly investing mistakes that you should avoid. When it comes to investing, making mistakes can be costly. In fact, they can be so costly that they can set you back years or even decades in achieving your financial goals. That's why it's crucial to avoid them altogether. In this video, we're going to explore the most common and costly investing mistakes that new investors face, and more importantly, how to avoid them. One of the most common pitfalls that new investors face is emotional decision-making. When the market is doing well, it's easy to get caught up in the excitement and invest without thinking things through. On the other hand, when the market is doing poorly, fear and anxiety can lead to impulsive decisions that can end up costing us big time. The key is to stay calm and objective, and to make decisions based on facts rather than emotions. Another common mistake is lack of research. It's easy to get caught up in the hype surrounding a particular stock or investment, but without doing our due diligence, we can end up investing in something that's not a good fit for us. That's why it's essential to do our research, read the fine print, and understand the risks involved before making any investment decisions. New investors often lack a solid understanding of the markets and how they work. They may not know how to read charts, understand financial statements, or analyze economic data. This lack of knowledge can lead to poor investment decisions, and ultimately, financial losses. That's why it's essential to take the time to educate ourselves on the markets and how they work before making any investment decisions. Furthermore, new investors often lack a clear investment strategy. They may invest without a clear goal in mind, or without a plan for achieving that goal. This can lead to a haphazard approach to investing, which can result in poor performance and financial losses. That's why it's essential to have a clear investment strategy in place, and to regularly review and adjust it as needed. First and foremost, don't forget to diversify your portfolio. Investing all your money in one stock or sector can be risky. Spread your investments across different asset classes to minimize risk. Secondly, don't chase returns. Investing in a hot stock just because it's hot might not be the best idea. Stick to your investment plan, and don't let emotions cloud your judgment. Thirdly, don't forget to rebalance your portfolio. As your investments grow, your asset allocation might change. Regularly rebalance your portfolio to ensure it's still in line with your goals and risk tolerance. Lastly, don't ignore fees. High fees can eat into your returns. Look for low-cost investment options to maximize your profits. Thanks for tuning in, and if you found this helpful, please don't forget to like, share, and subscribe for more financial advice. Until next time, happy investing. Today, we're going to talk about a topic that's near and dear to all of us, investing. Specifically, we're going to discuss how you might be wasting thousands of dollars on investment mistakes. Investment mistakes can be costly, and many of us have fallen victim to them at some point or another. From throwing money at hot stocks without doing our due diligence to panicking during market downturns, these errors can add up quickly, eating away at our hard-earned savings. But the financial impact of these mistakes goes far beyond just the monetary loss. It can also lead to stress, anxiety, and a general sense of uncertainty about our financial futures. Let's talk about some of the key challenges investors face. One of the biggest hurdles is emotional decision-making. When we're in the midst of a market fluctuation, it's easy to let fear, greed, or excitement guide our investment choices. We've all been there. We see a stock plummeting and we want to sell, or we see one skyrocketing and we want to buy it. But often, these impulsive decisions end up being the worst ones we make. Another common mistake is lack of research. We've all heard the phrase due diligence, but how many of us actually take the time to thoroughly vet our investments? We might glance over a prospectus or two, but really digging in and understanding the underlying risks and potential rewards is often an afterthought. And then there's the age-old problem of market timing errors. Trying to time the market is a fool's game, but we all do it to some extent. We think we can predict what the market will do tomorrow, next week, or next month, and we make investment decisions based on those predictions. Newsflash: nobody can consistently time the market. We've all been guilty of trying to time the market at some point or another, but the truth is, even the pros can't do it. Another common mistake is putting all our eggs in one basket. Diversification is key, folks, but we often get caught up in the excitement of a particular stock or sector and we forget to spread our risk. And finally, there's the mistake of not having a long-term strategy. So what's the most critical insight or piece of advice that can dramatically improve investment outcomes? Now, I'm not here to scare you or make you feel guilty. I'm here to help you understand how to make the most of your hard-earned money. Investing can be a great way to grow your wealth, but it's important to do it right. So, let's dive into some common investment mistakes that you might be making. From not diversifying your portfolio to not having a solid investment strategy, there are many pitfalls that you should avoid. But don't worry, I'm here to help. I'll share some tips and tricks on how to invest wisely and avoid these costly mistakes. Remember, knowledge is power, and with the right information, you can make the most of your investments. Don't forget to like, share, and subscribe for more financial advice. Until next time, happy investing. Hey there, fellow investors. Today, we're going to dive into the 5 most devastating investment mistakes that could potentially destroy your portfolio. So, let's get started. When it comes to investing, making mistakes can be costly. And I'm not just talking about losing a little money. I'm talking about destroying your entire portfolio and setting your financial goals back by years. That's why it's crucial to avoid these pitfalls and learn from others' experiences. In this video, we're going to tackle the top 5 investment mistakes that can ruin your portfolio, and I'll show you how to avoid them. From emotional decision-making to misunderstanding risk, these mistakes can creep up on even the most experienced investors. So, let's dive in and explore the most common mistakes that can devastate your portfolio. One of the most significant mistakes investors make is failing to diversify their portfolio. This can lead to overexposure to a particular market or asset class, leaving you vulnerable to significant losses. Another mistake is chasing hot investments, which can result in buying high and selling low. Many investors also fall prey to emotional decision-making, letting fear or greed dictate their investment choices. Then there's the mistake of not having a clear investment strategy, leading to a lack of direction and focus. And finally, many investors neglect to review and adjust their portfolios regularly, leading to stagnation and underperformance. Let's take a closer look at each of these devastating mistakes and explore how you can avoid them. The first mistake is failing to diversify your portfolio. This can happen when you become overly attached to a particular stock or asset class, and forget to spread your risk across different asset classes. The key is to create a well-diversified portfolio that can weather any market storm. For example, if you're heavily invested in a tech sector, consider allocating a portion of your portfolio to other sectors, such as healthcare or finance. The second mistake is chasing hot investments. This can be tempting, especially when you see a particular stock or asset class performing well. Mistake number 1. Not diversifying your investments. It's crucial to spread your investments across different asset classes to minimize risk. Mistake number 2. Ignoring the fees. High fees can significantly eat into your returns. Always choose low-cost investments. Mistake number 3. Not rebalancing your portfolio. Over time, your investments may become unbalanced, so it's essential to rebalance periodically. Mistake number 4. Emotional decision-making. Don't let your emotions guide your investment choices. Stick to a well-thought-out strategy. Mistake number 5. Not having a plan. A well-crafted investment plan is key to long-term success. Avoid these 5 investment mistakes to keep your portfolio on track. Thanks for tuning in, and don't forget to follow and subscribe for more investment tips and advice. Cheers!